As someone who's grown a small account into a decent sized one, I know what a pain trading a small account is. It is more difficult than trading a larger account. So in today's video, I'm going to teach you the types of strategies that I traded, the types of stocks that I traded, and we're going to build a scanner together so that you can find those types of stocks to hopefully help you on your goal of passing the PDT rule this year. And no, I'm not going to be recommending any shady funded accounts or offshore brokers or anything like that. I want you to open an account with an American broker that is FDIC insured. All your money is protected. Let's not do any of that shady get around the PDT rule bullcrap. I will help you grow past the PDT rule legally and in a safe space for your money. I am utilizing Charles Schwab. This is Thinkorswim, their active trade platform. You don't necessarily need to use Charles Schwab, although if you don't already have a brokerage, you're just getting into this game, I couldn't recommend them anymore. They've never done me any wrong. I'm not affiliated with them or anything. What I will say is I really love this platform. I truly believe Thinkorswim is the best free active trading platform because of the ability to create all these custom scripts you see that I have running in the background here. If you are at all interested in any of the strategies you see shown in today's video, they, along with over 80 other codes, are available for easy import on my website, daytradingstrategies.net, link in the description down below. If you don't know, the PDT rule or pattern day trader rule states that if you have less than $25,000 in a margin account type and you take 4 round-trip day trades within 5 business days, your account will be flagged as a pattern day trader and you will no longer be able to sell securities on the same day that you buy them. First thing to make note of here is the account type. A margin account type means a handful of things, but most notably that after you close your position in a trade, you immediately then receive that buying power back. If I buy $10,000 worth of XYZ at market open, sell it at lunchtime, that $10,000 can then be immediately used again. So the easiest way to get around the PDT rule is to open, instead of a margin account type, when you're creating your account with your brokerage, you can open a cash account. Now, cash accounts nowadays are in T+1 money circulation, meaning, do that same example, I take a $10,000 trade on XYZ stock, sell it at lunchtime. I then can't use that $10,000 in buying power for the rest of the day, but it clears and comes back into my account overnight. So at market open the next day, I can then utilize that buying power again. Back in my day, 4 or 5 years ago, I don't remember exactly when, I believe I cleared PDT in 2020, but whenever I was using a cash account, because this is what I did when I had less than $25,000, it was T+2, meaning you couldn't use that $10,000 the day you used it or the next day. So it really limited your buying power to you could trade half of whatever was in your account every day. Nowadays, you all have it a little bit lucky. You all can trade whatever is in your account every single day, and you'll get it back to use again tomorrow. Now, if you don't already have a brokerage account open, I would recommend that you go ahead and open a cash account. But if you already have a brokerage account and you still have less than $25,000 in it, there's a good chance that it's a margin account. If you didn't really maybe even know about cash accounts when you created it or just didn't pay attention, most, if not all, brokers just default you into a margin account. But have no fear, that's okay. I wouldn't even worry about switching it because you can switch from a margin to a cash account. It's usually a couple day process where they sort of lock your account down and you can't trade. But I wouldn't worry about any of that if you're going to go off of what you learned from this video, because even with everything I've talked about with the T+1 settlement cycle and all that stuff, what I'm going to recommend that you do for your trade strategies is just like you've been seeing on the charts behind you here that I've been cycling through while ranting. These have all been daily charts, meaning you have been looking at swing trading strategies. Swing trading, of course, means that you are opening a trade one day and closing said trade on a later day. This, of course, does not count as a round trip same day trade, so you never have to worry about the PDT rule while swing trading. This is just a more efficient way to get around, the PDT rule, rather than having to try to balance your buying power with the opportunities that exist every single day. Now, this isn't to say that you shouldn't day trade at all. If there's insane opportunity, like I tell this story a lot, but the day after this stock DRUG went up 3,000% in a single day, I was all over day trading low float stocks the next day. And I almost never day trade anymore. I used to a lot. Nowadays, I just don't have as much time. I've got a kid. I've got my business. I got a lot of stuff I like to do during the day. I typically don't day trade. But there are days like this where opportunity presents themselves. I know that after a huge day on a small cap stock like this, the small cap market is going to be more lively the next day. So I take advantage of those opportunities. You can still do that. Just understand, especially if you're in a margin account, understand that you can only take 3 day trades and the next one you take will put you under PDT. That would be real bad. If you're in a cash account, you're going to be limited by your buying power every single day. If you have a $10,000 account and you want to take $1,000 positions, that means you can take 10 trades, which is great, but that buying power is your limitation. So I want you to focus on swing trading, and I want you to also focus on the types of stocks that I have been rotating in the background here. I've had up SPY. I've had up Nvidia, I've had up Tesla, I actually just had up Waste Management. I want you to focus on strong companies. These companies are all obviously extremely strong, but they're also extremely big companies. They have huge market caps. What I don't want you to do is to try to trade stocks actually like DRUG, this stock we talked about. Beginner traders love to look at a stock like this and go, wow, look, I mean, it went up 10,000% in like 5 trading days or something. Like, holy crap, if I just hit one of those trades, I could break out of PDT. One, you'll never hit that trade. It just won't happen. That's called gambler's fallacy. It won't happen. Even if you get into a trade like this, you're going to sell when you're up like 20%. You won't hold this long. And every time you try to hold this long, it'll be one of the 999 out of 1,000 times that a stock doesn't do this. This is an extremely rare formation. Right? Beginner traders make the mistake a lot of seeing this happen and going, oh, maybe the next stock will do that. It won't. Not going to do it. Don't pretend like it's going to do it. Don't trade like it's going to do it. Don't try to catch this sort of trade. I want you to focus on consistency. Consistent profits. Even if there's lower profits, even if you're not trading the most volatile stocks and hitting as big of winners as you see everybody posting on social media. Remember also, people only post winners on social media. Social media is a highlight reel. They're not posting their losers there. Don't fall into the trap of wanting to trade like social media traders because they're just hiding their losses from you, right? Anyway, focus on the big companies and focus on consistent profits rather than trying to hit that home run. Now, if this is the first video on YouTube you're watching about how to grow a small account, good. You haven't been tainted yet. However, for most of you, this is probably your 10th video that you're watching with a similar title. And everything I just told you is probably about the exact opposite of what you've heard in those other videos. I've seen a lot of them too. Almost every single one of them will tell you to go after these big moves like this and to even try to intraday trade them. They want you to try to be scalping these sort of ridiculous moves, saying that that will help you achieve PDT faster. While trying not to sound too pessimistic here, just remember that everybody making stock market content has an angle. No one's doing this out of the goodness of their heart. I have an angle. I would like for you to sign up for my business, access my codes. That helps me sustain more consistent profit for me and my family. I hope that it also helps you out, the codes do, but that's my angle. Now, Other people may have more nefarious angles. I'm not going to name drop. I'm not even going to say out loud what the angles are. Just remember that sort of stuff. Really, whenever you hear anyone talking about trying to get you into trading low liquidity, meaning low volume, volatile moves, just be weary. Just be cautious when you start to hear that kind of stuff. Not everybody is nefarious. Not what I'm saying. I'm not saying don't listen to anybody that says that. I'm telling you to be cautious. I want you to focus on swing trading, and I want you to focus on swing trading strong stocks with a large market cap. Now, I have, for the entirety of this video, had on my reversal swing trading strategy. I have now turned on my continuation swing trading strategy. I'm not gonna turn this video into one that delves into exact strategies, because there's not an exact strategy that you should trade. You need to pick a strategy based on your back testing that aligns with your max drawdown goals, your average trade goals, your win percentage goals. Everyone's going to have different target goals in their trading. That is going to help dictate your strategy. And I've already made a video about every single one of my strategies on this YouTube video. And without shilling too much again, of course, you can access all of my strategies over on my website, daytradingstrategies.net, linked in the description down below. This is where I would wink if I could wink. I can't wink. Isn't that ridiculous? Anyway, let's now hop on over into the scan tab and let's build a scanner together that will return us these not only large market cap stocks, but also ones that are strong. I actually already have the stock filter set up for finding the large market cap companies. The way you do this, if you don't already have stock filters, is you come to add filter, you click on stock. This will give you a drop down that you can select a stock filter from. The way I have mine set up, I have set up last, meaning current price, minimum of $1. Just don't show me penny stocks. Next, I have my market cap now set to a minimum value of 200 million. This is where we, of course, are objectifying our rule set of the scanner to say, hey, only show me, obviously, very large market cap companies, and only show me companies that have traded at least 1 million shares on the day. I don't want to see any of that low liquidity crap. I don't want to mess with any horrible bid-ask spreads or get stuck in trades because there's no buyers. Any of that kind of mess, a stock must have traded at least 1 million shares on the day. So I went ahead and ran this scan, and of course now we are returned only large companies. But remember, I only want you targeting strong large companies while trying to grow your small account above the PDT rule level, because there's a lot of crap out there. Even in the 200 million plus market cap space, there's a lot of tickers with really crappy charts. Your job as an active trader is not to try to pick which one of those crappy charts is going to turn around, because 99 out of 100 of them just end up never turning around. We're going to target strong stocks only to help with the consistency of our own personal P&L, right? So what we're going to do this, Anyway, I'm going to come into add filter. This time, rather than adding a stock filter, I am going to add a study filter. Then we're going to click on the pencil icon here, which is going to pop up our study filter editor modal. What I'm going to do now, of course, is click on this edit button, and this is going to bring up a modal, which is a compare equation. You're going to have a value on the left-hand side here. You're going to have a compare expression, and then you will enter a value on the right side. In order to quantify which of these charts are strong, I am going to use the 200 simple moving average. Essentially, is the current bar closing above the average closing price out of the last 200 bars? So to do this on this left-hand side, of course, we're going to want closing price. So click this drop down, go into the price, which will bring up your price functions. We're just going to use close. Easy enough. This part, also easy enough, is greater than. The close is greater than. Now on this right side, click into the dropdown, we are going to look up the study function that is a simple moving average. Great. By default, simple moving average of 9. We, of course, want to change that length parameter to 200 instead. So stocks will now only return on this scanner if their current closing bar is greater than the 200 simple moving average. Save this, and just to make sure you all can see to understand it, we are running this on the daily chart. Our aggregation here is set to daily. You can use this information to switch this if you create scanners in the future, but we obviously, as swing traders now, or creating a swing trading idea here, want to run this on the daily chart. Now, if I hit OK, let's go ahead and run this scanner again. We are currently at 1,184 results. When I run this scanner, we are now only at 575. So we lost about half the stocks on the list. Remember when I told you there's a lot of crap in even the 200 market cap world? Half of the stocks trading greater than a 200 market cap and 1 million shares in volume are below their 200 simple moving average. Not worth looking at if you want to trade strong stocks. But now what, right? Now we have 575 stocks. What am I supposed to do with this? Are you supposed to go through every single one and just pick one that you like and buy? No. Of course not. First off, you should never just randomly pick a stock and go buy it. You only enter and exit trades based off of back-tested strategies that you have proven worked in your own trade arsenal. Anyway, let's go ahead and break down this scanner using a custom column. We are now going to sort these scan results by the stocks that are the furthest above their 200 simple moving average. So yes, we now only have stocks that are above the 200 SMA. Let's now sort them by the ones that are the most above the 200 SMA, the ones that are the strongest. To do this, I'm going to click on this little cog here to the right of my scan return column names. I'm going to click on customize, and that's going to pop up this little motor. Now, this is maybe a little tricky. What you're going to do, you're going to type in custom. You are just going to see a list of custom columns like I have, but yours are going to be named different. You're going to see something like custom 1 through custom 19. I've just already used all mine, so that's why they're not the same names. But that's perfectly fine. Just click on any of them, any of the custom ones, click on their scroll. I'm going to click on this average distance one, and you'll see why in just a second. This is actually already the formula 4% change of current closing bar from the average close out of the last 200 bars, which is, of course, the same exact calculation as the simple moving average. So what I want you to do, once again, click into the scroll of one of your custom columns here and just simply type in what I have typed in here. I'm trying to ramble long enough right now that you can see this for long enough to get it copied. If you haven't seen it all yet, just feel free to pause the video now, type all of this in, and once you do, of course, make sure that you double click on it to change it from this side to your actual side that is going to show the column here. Go ahead and hit OK. You should now see percent numbers showing you, once again, the percentage points away that the current closing price is from the 200 SMA. And if I click on it twice to sort it top down, we should now see stocks like APP, which are apparently 135% away from their 200 simple moving average, which is a little bit insane. While this stock is very strong, let's go ahead. Actually, let's remove all of my studies. Let's get all of my custom stuff out of the way for just a second. I want to turn on a 200 length simple moving average here real quick. Turn on a 200 simple length moving average. I trust that my calculation is correct, but just to confirm, hello? Why did this just break my chart? That was weird. Anyway, reload the chart again. I'm going to now take a look. If I draw a line from here to here, I am seeing roughly 136% away that this stock is from its 200 simple moving average. It's actually 135%. That's great. I trust this calculation more than my line. But look at how strong this stock has been. And even back here, the stock was 110% away from its 200 simple moving average. That is before the stock then still made another 140% move. So a lot of times when I build like scan columns like this, they're like, oh, well, Trey, why would I want to see these stocks? These stocks have already made moves. Why would I chase these moves? This stock would have been really close to the top of this scanner, even when it was trading here at $176 a share before it jumped up to over $400 a share. I hate when beginner traders get all caught up in the negatives of chasing a move. Like, yes, that should be a thought in your mind, chasing a move, but guess what? Stocks are more likely to continue going in the direction they're going in than they are to not. Does that mean stocks go up or down forever? No, of course not. Trends do change, but it's easier to follow a trend than it is to try to reverse it. Let's go ahead and down to the next example. Let's go look at AAOI. I actually wrote something on this. I think this was back when I was streaming. This must have been like right around when I was still streaming. Yeah, short 19, stop over 20. Well, you got stopped out of that trade idea. Well, I mean, it did drop down to 15 after I wrote that. So I guess decent short idea, Trey. Anyway, let's look at AAOI. Once again, this stock currently second on our list because it's about 130% away from the 200 simple moving average. But guess what? Even back here on this move, it was 120% away from its 200 simple moving average, still went from $27 all the way up to over $44. Now, I also, word of caution, does that mean that every single stock that appears on this scanner, we just got like two really good examples, but does that mean that every stock that is at the top of this watch list is going to go up another 100%? Hell no. Of course not. That's not the purpose of this scanner, right? The purpose of this scanner is to return you the types of stocks you want to trade. You want to trade large market cap, strong stocks. It doesn't mean you then just go randomly start buying shit off of this scanner just because it's there. You now have the kind of stocks you want to trade. Your next goal is to then apply strategies that you have tested yourself, even if you got them from me, even if you sign up to my website today and you've got these strategies. Also, don't just go randomly start trading them. Please test them yourself. Once again, make use also of my back test data code to run your own test and to look at your own statistics. Test them yourself, understand what works for you, accept the risk, then apply the strategies to these charts. So guys, remember, if you're interested in anything you've seen on your charts today, they, along with over 80 other codes, are all available for easy import on my website, daytradingstrategies.net. And yes, it costs money. Nothing in this life is free. Life's a bitch. I know it, but 80 plus Thinkorswim codes that you can easily just copy a share link and import into your own platform for $30. It's a ridiculous deal. It's way less than 50 cents a code. Yes, I do have it set up as a recurring membership, as I am always adding and updating the codes on the website. So I, of course, hope you choose to remain subscribed. But if you just want to download something that you've seen today and then cancel your subscription, you can do that really easily as well under the My Account tab. So daytradingstrategies.net, linked in the description down below. At least come check it out. Check out the reviews. Get yourself a little feel for what's going on over here. Then if you decide you like it, click on our codes, get signed up, and become a better trader today. If you learned something today, if it made you excited about your prospects of trading in 2025, please take the half second, hit the like button. It really means the world to me. If you would like to continue learning, make sure you're subscribed to the channel. With all that being said, I'll catch you all in the next one.